Hello everyone, this is Jose Blasco. We are about to start the session. We'll start in around 30 seconds. This is a sound check. It would be great if you could confirm that you hear my voice in the comments box by just typing anything, something such as sound good, sound okay, something like that would do. So that way I know you hear me and we start in just a few seconds, okay? Very good. So I got my countdown that just finished here. So I'm going to maximize the introduction slide as we always do. Wonderful to see that you hear me. Thank you so much for that, John, Al, everyone. Good to see you all. In this Saturday session today, we are getting together for sharpening purposes, isn't it? And again, always good to obviously always, I would say, always better to get together during the weekdays and execute some trades together. But at the same time, it's always good as well to pause, to go back to the basics, to learn, to develop improvements on our methodologies and our approaches to trading. And this is what we do over the weekend, taking advantage that the market is closed. Okay, so a pleasure to join you and to see you here. Hey, Orlando, how are you? Hey, Supply and Demand Trader. Wonderful to see you. John, first time live. Wonderful to hear. Yeah. Very good. I hear you, Orlando. Wonderful. Okay, so everyone, let's get started with the session. Official welcome to the session, guys. My name is Jose Blasco. I will be your guide in today's session. Today, we are getting together on June 22nd, 2019. And the purpose for us to get together today is sharpening, okay? So spicing up those skills and just keep improving, okay? That's the bottom line. So disclaimer, before we get started, the following videos, clips, demonstrations are for educational and instructional purposes only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay, good. So again, a little bit of formality, legality, however you want to call it. We have our introduction and we are ready to get started. Okay, so of course I have translation here, and by the way, I almost forgot. Let me tell you, and some of you know because you have been attending live prior sessions this week, and you know that at times I had a little bit of trouble, isn't it? So just for all of you to know, I am in China, physically speaking, right now as we speak. Obviously, there is, I need to do a little bit of magic to be able to have this video on YouTube, since YouTube is not running on Chinese networks. So the other day worked well, the other day worked less well. Okay, so if you were to see that I get disconnected, I will reconnect. So please bear with me. I will be connected on the YouTube chat anyway, so I could certainly keep typing there and be in touch with you if you were to lose my sound or my screen. Okay. In any case, I believe that things should be okay. And if that's the case, the session will run just smoothly. Okay, but just for you to know. Anyway, so coming back to the purpose for the session and what we're going to do today, well, basically, we have been running during the past 2 sharpening sessions. We have been talking about longer-term trading. We have been talking about the investing. We have been talking about portfolios. We have been talking about many things, many consequences or implications of holding positions for a long time instead of trading intraday. The good news, as you saw, is that the methodologies that we use when timing the markets, okay, that's key. Deciding when to buy, deciding when to sell, no matter what you trade, is key. So the methodologies, as you saw, are the same that for intraday. We use our moving average and the DMI to have an understanding of the market environment, and based on the market environment, we understand which side in the market should we be, long or short or nothing. And from there, we use the UFOs, with certain rules in order to time those entries and exits, and stack probability in our favor, and have a very mechanical approach to planning our trades and the execution. And hopefully those last 2 sessions that we did have been useful to you guys, have been eye-opener, etc., etc. And one of the things that we also realized in those sessions is that options, it's such a key instrument when dealing with longer term positions. And there have been times where I talked about it, but at the same time, there have been times where I have been quite limited on being able to go deeper into certain option subjects, just because we never had the chance to dive deeper into how options work and talk more about things such as the Greeks, or talk more about other combinations of options, other strategies that could be very useful when we get in this damage control mode, when a trade that we are executing with options is not working well because the market is moving against us. So basically, we reach a point where we need to get deeper into options. But also, the other problem that we had, and you asked me a few times in the past, so I'm gonna fix it today, is that many times when I plan options trade, some of you are having difficulty following the use of the TradeStation software. TradeStation has a tool called OptionStation Pro, isn't it? This is the tool that we use for options analytics. And let me bring it in the screen. And there have been times where, some of you had difficulty when it comes to following how I was using this tool, and therefore you have been gaining certain level of knowledge in the sharpening sessions. But unfortunately, you have not been able to apply it to yourself on your own, because the moment you put yourself in front of OptionStation Pro, in some cases, you kind of got stuck because you didn't know much how to use the software or how certain functionality works. Because obviously, when I do it during the get-together sessions during the weekdays, I do it pretty quickly, since we only got 1 hour to plan trades, and I have to at times rush a little bit. Okay, so we got a problem of the egg and the chicken, which is that for me to teach you advanced option stuff, I need to demonstrate it with OptionStation Pro, but I cannot really do that unless I teach you OptionStation Pro. But if I teach you too much of OptionStation Pro without more options knowledge, so we may get stuck as well. So again, we have a little bit of the problem of the egg and the chicken. So therefore, for me, the plan for today to help you with this would be to today focus on OptionStation Pro. Just have a simple session today. Probably actually it'll be shorter than normal. So instead of going for 2 hours, maybe we're just doing a 1 hour session or something like that. We'll take any time that is needed. And basically explore OptionStation Pro, get to understand better the different possibilities within the software. So that way, when in following weeks, I start diving deeper into options, into very important advanced concepts of options, combinations, again, that damage control mode, which is really powerful with options. When I get into all of these and we start putting it into OptionStation Pro, then everybody will be able to follow. And I think that would be the easiest way to do it, instead of being too theoretical when going over options content, and you never got to see any application of it until the very, very end, when it comes to the options lectures, if you wish. So the idea today, again, would be to go over OptionStation Pro. I would understand that in the group, some of you are used to OptionStation Pro, and therefore today is going to be a little bit of a review session for you. Others, as I said, many of you have sent emails and have requested that we take care of the software, so that way you are not lost when we do the sessions, and you can follow, and most importantly, replicate those trades on your own when any other day that is not a Thursday, right? Because Thursdays we get together, but any other day we don't for options, and therefore you can do it on your own, okay? So that's the plan for today. Again, simple session, but at the same time, very important one, okay? By the way, as I begin with today's session as well, I would like also to gauge what are your priorities as well for future sessions, okay? So the natural continuation of today's session with OptionStation Pro will be to begin diving deeper into options, okay? So that definitely, but at the same time, you may have other priorities as well. And even though many of you send emails to us and so on, and we kind of know what you need, It's always very healthy that you say it firsthand if you wish. And if you could say it now live, even better, because if I have any question, I can ask you, okay? So please, in the chat box, if there is anything that you need, this is the time for you to type. If you want us to conduct a session about certain subject that we haven't done yet, please let us know. If you want us to conduct a new session on a subject that we conducted already, but just as a review, let us know too. It's good to know. Or if you want us to take a prior subject and expand on it, or something like that, or do a Q&A of a prior subject, or something like that. I mean, anything that comes to your mind. Again, we are here to help. And again, we need to be connected. So that way, I can help you much better, okay? Marcus, good to see you, by the way, Marcus. Not yet into options, but interested in doing so one day. Yeah, I mean, options and Marcus, we had some chats in the past, so I know somehow I kind of understand the way your brain works. I think that we are quite similar, I would say, based on some conversations that we had. Pretty analytical people, isn't it? Engineering background, if you wish, right? So the moment you get into options, just let me tell you, it's going to be a little drug for you because options gives you options, like the name suggests. And there are so many different possibilities to be, explored, which are very, very, very powerful, okay? Yeah, so Bojan, you still have the number 8 session to finish. Okay, got it. I understand. Good. So again, please, guys, don't be shy. Okay, having requests. Again, we are here to help. We are strongly committed, guys, to help you in your trading journey, in your trading evolution, in your transformation, if you wish. We have a fantastic tool, which is the AutoUFOs. I mean, I think we all agree it's great. That's why we're getting together, right? But at the same time, it's not like AutoUFOs does magic. Okay, we are still the trader, the human being, the one that we click the button, right? And it's a great tool that helps us big time, but still we need to develop ourselves as a person, as a trader, develop habits, develop discipline, and of course develop a certain level of knowledge and skill. And I'm super, super happy to take care of all of this for you guys, because in the end, this is how we are building a very powerful community of UFO traders. It's all about developing ourselves at all levels and from all angles. Okay, so please don't be shy. And also, I would understand if you were to tell me, okay, but you know what I want to request is quite private. It's a little personal. I don't feel comfortable typing. So then send an email to reach@tradewithufos.com, as some of you have done before, and make sure you speak up. Okay, don't stay quiet on the sidelines just because maybe you have joined our community just not too long ago. Please go ahead and speak out. Let us know what you need, and that way we'll be able to do a better job. Okay, cool. So John, I am still soaking it all in. I learned something new from every session. Thanks for everything you teach. I appreciate it all. That's very kind of you, John, and it's my true pleasure. Believe me, it's these sessions are very special for me. Okay, so thanks for saying that. Bill, a session on the micro futures products. Very good. Yeah, that is one that is in the list already. So it's great that you are pointing at it, because I understand that it's becoming more and more important. To be honest, the micro minis are a product that, in one hand, is not surprising to see that the volume it's quite decent. So in one hand, it's not surprising. In the other hand, it is quite surprising to see how fast the volume in these products have been growing. So I'm with you, Bill. It's becoming close to urgent that we address it, because I'm pretty positive that many of you in the community are trading Forex and have not traded futures for intraday purposes. And the reason why you may not have traded futures, at least this is what happens most of the times to most traders, it's because the margin requirements, the amount of money needed in an account to trade futures, normally is more than Forex. So sometimes I've seen traders with limited resources when it comes to capital, and they end up trading Forex because of limited resources. Sometimes I've seen traders without limited resources, but just because the personality of the trader is quite careful, those traders end up trading Forex just because you can trade micro contracts, mini contracts. So that trader that does not have limited resources may go the route of trading Forex kind of test the waters with very limited size, just because of a very conservative personality, with the intention that someday that trader will trade bigger products such as futures, such as gold futures, etc., etc. And guess what? If for whatever reason with Forex it didn't go well, then next thing you know, that trader gives up. Okay, and let's face it, especially for the lower time frames, and we talked about this when we did Forex, when we did sharpening Forex. Let's face it, trading Forex in a very short time frames is not so easy, because it's not a centralized product. Every broker got different prices. And we talked about the fact that you may get stopped out just for a little bit and then price goes your way, which these type of things normally with futures would not happen the same way, because futures trades in a centralized exchange. Okay. So Bill, I'm 100% with you, because now with the micro E-minis, you can trade sizes which are just as small as the sizes that you will trade when you trade Forex, but you do it in a centralized environment. Okay. So you can use Forex for what is best, which is, trades that will last, a few hours, a few days, a few weeks. And you can use futures for what it works best, which is the intraday. Okay. And it doesn't mean you cannot do Forex intraday and you cannot do futures for longer term. It doesn't mean you cannot do that, but I'm talking about maximum efficiency. So maximum efficiency is going to be futures intraday. You got much better margin intraday with futures than when you hold overnight, isn't it? So again, maximum efficiency, it's holding shorter positions with futures intraday, and for longer positions, you either use Forex or options. Okay, that's where you reach maximum efficiency. So again, long explanation here, but Bill, 100% agree with you that we need to talk about that. Okay, so the micro E-minis is something that we need to address soon. Okay, I'll be updating you as well as in future sessions. I just said it that the following sharpening sessions will be more about options, since today we're going to do OptionStation Pro, but I will also keep you updated on what are the next sessions as we get organized. Okay. What else? Marcus, will now make the UFO strategy work in FX and futures and in fall with start with options. Assuming I'll be consistent and profitable trading with the markets, I already know. Yeah, I get you, Marcus. Okay, but at the same time, let me make one comment. One of the things that you need to use, and this applies to all of us, one of the things that we need to use always when we trade Forex or futures is stops. We always need to use stops when trading Forex and futures, always. Because if a market goes against you and it goes against you on leverage, you could hurt yourself way too much. Okay, and on top of that, you could get emotional because of that and hurt yourself even more after that crazy trade is over. Hurt yourself even more because of getting emotional. Okay, so very simple rule forever, for the rest of our lives, for all of us, no exceptions. We always use stops with Forex and futures. Always, no matter if it's long-term or short-term. With options, it's different. Okay, and we have been talking about that during the last 2 weekends. With options, if you buy an option, the most you can lose is what you pay for the option. So even if you don't use stops, the most you can lose is limited by what you pay for the option. So you have limited risk even if you don't use stops. In other words, when you have scenarios, Marcus, and I'm sure you have seen that many times, where you have, let's say, 2 UFOs on top of each other, or even 3 UFOs on top of each other, or 4 UFOs on top of each other, sometimes the question is, where do I place my stop, right? And if you place your stop below all those UFOs, you are taking huge amount of risk. Now, on the other hand, if you place your stop, let's say, under the first UFO, you also run the risk that you get stopped out. That market reaches the second UFO or the third, bounces and goes exactly where you thought it would, but then you're out of the trade because you've been stopped out. So what if you had taken those trades with options? Well, then you would still have made some profits, even though initially, in the beginning parts of the trade, the market went against you a little bit, but then in the end, you still made money because you never got stopped out, because you never used a stop. And this is not a crazy thing to be done, because again, the most you can lose is what you pay for the options. So you do have risk management built in the options. Okay. So in other words, okay, and I'm going to really oversimplify what I'm about to say, but just to open your eyes in case you don't know much about options. what I'm going to say is that it's a little easier to make money with options than without options. You could afford less precision with your entries and still be okay. Okay, I'm not saying that's the goal, and that's why we use UFOs, to be as precise as possible. Okay, and that's important for you to keep in mind. But at the same time, we also know, especially when trading options, it's going to be options on stocks, and stocks are fragile. And we talked about that in the prior 2 weekends, isn't it? And therefore, they depend on the market. And a stock may enter a UFO, but the S&P hasn't yet, and therefore price goes through the UFO until the S&P reaches a UFO, and then everything turns. The S&P and that stock. Where if you had traded with options, you would still be in the trade. If you had used a stop, you would be stopped out. Okay, so sometimes, and I understand very much your thinking process, Marcos. As I said, I'm very perfectionist myself, but sometimes we're too perfectionist, and somehow you are like, okay, let me master Forex, let me master futures, let me master stocks, let me master everything, and one day I will look at the options, right? It's like, I was going to use a very bad analogy. I'm not sure if I should use it or not. Okay, I'll use it, but just keep in mind it's very bad, okay? It's like, okay, let me learn how to drive a bike. Then let me learn how to drive a tiny car. Then let me learn how to drive a medium-sized car. And once I am proven good driver with all those vehicles, then I'll drive a Ferrari, right? So you know what? In the end, all cars got steering wheels and throttles and brakes. And if from day one you have been driving the Ferrari, next thing you know, not only you have more performance from the beginning, you will be driving the tinier car even better from the beginning too, because the moment you master the Ferrari, no matter what you have to drive, you're going to be fine. So again, probably this is a terrible analogy, and some of you are kind of having a smile on your faces, but just keep that in mind, okay? Because sometimes I've seen it often enough to say it. I've seen many traders just to push options away just because initially the impression that many traders have about options is that it's more complex. And it doesn't need to be more complex. You could use very simple option strategies and benefit from options, and you don't need to make it complex. Could it be more complex? Of course it could be. Could it provide advantages thanks to that complexity? Certainly. Is it worth it? It depends. It depends on what are your goals, okay? But at the same time, just pushing it too far in your trading life, I would not recommend to do that, okay? So hopefully I made my point, even though, of course, in the end, it's all about your goals and your availability for times. Some of you are very busy people and you may not have time and you need to pick one. And so again, I totally understand and respect, but at the same time, you may feel it. I'm quite passionate about options, and it's not only because I like them, it's because I have a reason to like them. Actually, I have many reasons to like them. And those reasons basically have to do with dollar signs. And in that sense, I advise you to plug options into your life the sooner you can, because it's very powerful. I will also say that everything in life got pros and cons. And for example, let's say you want to trade options on the Canadian dollar. Well, good luck with that, because probably you will find extremely little liquidity, and probably you end up trading options on an index which is cash settled. It's not even the real Canadian dollar. And you know what? That index that doesn't even trade 24 hours where the Canadian dollar does. So in other words, options on equities, for example, are amazing in many cases. Options on certain commodities are terrible. So again, it's like everything in life, everything got pros and cons. You need to know your stuff. You need to know what you trade. And if you have an opportunity, take it. And if you don't have an opportunity, just pass and go find a better one. And that's it, okay? Anyway, long conversation here. Long conversation before we're getting started. But again, important stuff for you to know, especially because I know some of you watching this session live or also recorded. Some of you are kind of watching the get-together sharpening sessions on options that we have done before, and you're kind of watching it little by little, and it's certainly a good idea to do it like this. But at the same time, maybe if you give it a little more priority, you find some help, okay? Because options can really help you, okay? Anyway, very good. Yeah, Orlando, liquidity issues with the micro. So this is something, again, to be careful about. My impression about liquidity with the micros is that is better than expected. Obviously, it will never be as good as the S&P 500 index itself. But again, we'll do a session to talk about it, Orlando, okay? Marcus, future spreads might be interesting and helpful as well. Well, to be honest, I would kind of disagree with that. Certainly, future spreads could be interesting, especially for commodity traders to manage the gap risk, because probably you know that certain futures commodities don't trade 24 hours a day. They may trade 12 hours a day, 16 hours a day, things like that. And therefore, you have a huge probability of a gap on leverage. And to manage that, future spreads could be useful. Also, for traders that are not very good with timing the markets, but are very good with seasonality and stuff like that, then future spreads can be quite useful as well. And also, to reduce the margin required, it's also very good in futures to do spreads. But the speed at which you profit, it's just like the margin. The margin is reduced, and therefore the speed at which you profit is greatly reduced. Okay, so I personally welcome much more the use of futures if you want to have less exposure to risk with a product of a lesser point value and a lesser margin, instead of reduce the margin via future spreads, because you really kill a lot of the performance. Okay, and again, I'm not saying it's wrong, and you can certainly do that. But again, if you have tools to be more precise with the timing, then you will be better off using one contract of futures instead of two to build a spread. Okay, so that would be my take on your comment, Marcus. Even though from a curiosity point of view, it's certainly interesting to talk about future spreads, but I would bet that then it's going to be 1% of you guys trading future spreads, because you can make much more money in other ways. Okay, Bojan, Jose, one of your comments during one of the sessions really struck a note with me: to learn both intraday and options at the same time. That way, in the same period, we'll master both. Yes, it's true. It's true. Bojan, so really thank you for sharing your trading psychology, which I think a dedicated session would be nice. Oh, very good point. You know what? I didn't have because I'm always kind of talking about trading psychology as we are conducting sessions, because you cannot separate. But your proposal, Bojan, and you know, I like very much your idea, is to actually have a session on psychology. Okay, and only talk about that. Okay, so if I understood well, that would be what you would like to do, and I think that would be a great idea, because in the end, who clicks the button? It's us. And you know, sometimes I don't know. It's like sometimes, you know, I mean, it happens to me. Like, for example, I remember when I was a teenager, there was the father of one of my very good friends. One day just gave me a life advice. You know, just but that life advice was just a tiny thing. You know, it's just like one sentence. You know, but still nowadays, you know, so many years later, you know, is that many times I have to do something in life, and that thought will cross my mind, and it will help me to take a better decision. You know, so again, maybe it's a great idea that we do a session on psychology, and we can share some insights. Okay, and maybe that could also help you to you know, produce the right type of mindset in trading. Okay, putting on the side if you use UFOs or you don't use UFOs. Okay, just the mindset. Okay, so great one. Anyway, guys, hey, long introduction, guys. Okay, I'm just realizing I've been introducing the session for 30 minutes. Okay, again, I just have fun when I connect with you guys in these relaxed sessions over the weekend. But it's time to begin. Okay, so so let's begin with OptionStation Pro. And again, the idea is to do a little bit of a tour, understand what's possible with OptionStation Pro, give you certain recommendations when it comes to certain settings, and then especially when it comes to the analytics of OptionStation Pro, which is what we use when we plan trades, to look more in detail of what are the things that I do when I plan a trade or I adjust a trade with options and so on, and you know, which places on the screen my eyes are focused on, what is the important information, how do you adjust certain things, you know, all those mechanics on how to put together an options trade thanks to OptionStation Pro. Okay, so let's begin with a little bit of a tour. Okay, and when loading OptionStation Pro, actually maybe I should even start before that, okay, with TradeStation, you have a trading app section, and also it depends if you're using OptionStation, if you're using TradeStation 10 or you're using 9.5. I am using 9.5 in the sessions. I also use 10. I use both, and in both cases, when you get in the app bar, you get this icon, OptionStation Pro. Okay, so when you click on it, okay, TradeStation opens a separate application, which is OptionStation Pro. This application is separate. Okay, so it's not running inside TradeStation; it's running outside TradeStation, which is great because that way it doesn't impact so much the processing power of needed to run TradeStation. Okay, so it's great. It's a more modern application. Okay, now what do we have? Well, when you load it, okay, by default you get those 4 tabs in the bottom, which are options, analysis, manage, and search. So I'll start from manage, to be honest. And the manage tab in OptionStation Pro really, it's more, even though it's within OptionStation Pro, it's much more what you would think has to do with the trade manager. So TradeStation has something called the trade manager. I'm just loading it here, where the trade manager, it's a window that I believe you guys know. I'm sure you have seen it before. So the trade manager window basically is a window that allows you to look at your orders and your positions. Okay, and there are more tabs. You can look at balances and you can look at things. But normally most of what you probably do with the trade manager has to do with orders and positions. Okay, so even though this is a totally separate application, and this one, the trade manager, okay, it runs within TradeStation. Well, the OptionStation Pro does have inside manage, does have some sort of a trade manager, even though it shows vertically. Notice on the top you have the orders, and in the bottom you have the positions. Okay, so instead of horizontally in 2 different tabs, what happens here is that inside the one tab called manage, you have 2 panes, one above, one below. The one above has to do with orders, the one below has to do with positions. Okay, so different way on how to be organized, but in the end, it's the same story. So we have a bunch of positions running. Those positions are currently reporting an open profit and loss of $441. So those positions are making money, all right? And then on top, you have orders waiting to be executed. They are queued. That's how TradeStation call them. They are queued orders. And, you can see that we have a spread on Merck. We have an order with JCI as well, and also some trade with McDonald's, okay? So, again, this is not useful when it comes to planning new options trades, but it is certainly useful for you to understand very quickly, just by looking at one screen in just like very few seconds, you immediately understand what is it that you have in your account. By the way, you can change your accounts here on the upper right. You may be dealing with multiple accounts, so you can certainly change. If you were to click one account only, so this would be customized for that one account. If you are connecting multiple accounts to one of your TradeStations, so you will have a long list with multiple accounts. And if you click all, it will be the aggregate result of all accounts. Okay, so again, this is kind of self-explanatory, but it's important, okay, especially because a little later in time, as we keep doing our sharpening sessions, and I said that before, we will get into very important concepts such as portfolio management and things like that. And when we get into concepts such as portfolio management and things like that, so there will be a moment in time where for you to take an options trade, you will need to plan it. But the options trade that you will be looking for will depend on what you have in your portfolio. For example, let's say in your portfolio, you have multiple trades where you're long, and what you want to do is that you want to offset that portfolio with a little bit of shorts, so you have a little bit of a hedge. Well, you would come here, identify that you have too many long positions or too many non-directional positions, and therefore you will want to look for, maybe shorts, maybe directionals, maybe non-directionals. So again, you would probably click on this tab, quite often to understand not only what is the P&L of the account, but also have a little more visibility of the different underlyings and therefore the positions that are running. Okay, so again, this is an important tab, and you are likely to use it very, very often. By the way, on the top as well, you have an appearance button. File. Wait a minute. I just got confused here. Yeah, I just got confused. Some feature that is available in TradeStation 10, not 9.5. So forget about it. I didn't say anything. So yeah, so we have our Manage tab. Okay. Now, second most important tab, obviously, is or maybe most important tab is going to be the Options tab. Okay. So what the Options tab is going to give you access to is the options chain. Okay. Options chain basically is a list of all options available in the market for a particular underlying, where on TradeStation you would input that symbol on the upper left. Now, that symbol can be input manually. For example, I could switch this to Facebook. I would type FB. The moment I type FB and hit enter, a new option chain, as you can see, will be loading, and all the options that will appear in just a second would correspond to Facebook, and it's going to be all the options available for Facebook. In options trading, we use a concept. This is just a term, and the concept that we use is listed options. So when we trade options, we trade listed options. And what does that mean? Well, it means that the exchanges have listed X amount of options, meaning X amount of contracts that have specific expiration dates determined by the current regulation, okay, and also specific strike prices, which those normally are more determined based on liquidity. So if a stock, an option is very liquid, exchanges release many strikes. If a stock is less liquid, normally exchanges release less strikes. Also, it depends on the price of the stock. If the price of the stock is greater, exchanges release strike price increments of $2.5 at a time, $5 at a time. If a stock price is cheaper, exchanges may release $1 price increments, even sometimes $0.5 increments when it comes to the strikes available. So one question that options traders will always have is which options are available for that stock. So because, you will look at the chart of the stock, plan on an options trade, and when it's time to execute the trade, it's a natural question. You'll be wondering, okay, so which options are available? Okay, I need the 188. So which one is available? Okay, oh, I got the 190. Oh, maybe I got the 197.5. How do you know that? You need to come to the option chain. You would then click on the expiration date that you need based on the trade that you're planning. And now you'll be like, okay, so the one available is the 187.5. Okay, so again, the option chain is critical and massively useful for options traders because it gives you access to discover which are all the options that have been listed by the exchanges and therefore are ready to be traded by you if you choose to. Okay, so super important tool. Now, in OptionStation Pro, because what I just said right now applies to all trading platforms. So specifically for OptionStation Pro, the option chain has a few features which are very interesting. For example, you can choose to show all strikes, or you can choose to show a limited amount of strikes. So this is very useful depending on the strategies that you use. Let's say, for example, you are a person who likes to trade straddles in front of earnings, which, by the way, I would not be too inclined to do that. But let's say that's you, okay? And straddles use at-the-money strikes. So then you don't need, even though if you were to look at June 28 expiration, you have all those strikes that have been listed. Really, you don't need those. The only thing you need is the at-the-money strike. So what would you do? Well, you will pick the smallest number available here, which is 2, and therefore notice how TradeStation OptionStation Pro automatically filters out all those other strikes that are further out the money or further in the money, and only leave you with the 2 strikes that are nearer to at the money. So that is quite useful in order for you to compare different expiration dates. Let's say you want to do a strangle or, sorry, not a strangle, a straddle, and you are undecided, hey, should I use July 12 or July 05? Well, now you can very quickly, very easily look at things such as liquidity. For example, you can see that this option in July 12 has 10 cents of spread, where you can see the one in July 5 got 20 cents of spread. And you may say, okay, you know what, I'm going to use the July 12 because it's more liquid. Okay, it has a narrower spread, at least, you know, at the moment of the closing time of the market. We also know, this is just a side note, and this also applies to all platforms, but just for you to know in case you didn't, when the market's close, spreads always widen a little bit, and therefore the data that you see in an option chain while the market is closed may not exactly represent the reality of the liquidity available during market hours. So during market hours, you may have 10 cents spread in both expiration dates, okay? But in any case, it could be useful at times to compare 2 different expiration dates. And if you were to use all strikes, well, next thing you know, you are now forced to scroll up and scroll down to be able to do comparisons, and now it becomes uncomfortable, okay? So again, sometimes you have to, depending on the strategies you use. Sometimes you are happy with a small number such as 2, 4, 6, and therefore all the information fits on your screen, which is appreciated for comparison purposes, okay? So this is one filter for you to keep in mind. A second filter for you to keep in mind has to do with expiration dates. Okay, so in trading, there are always 3 things to be determined, right? Which is, do you want calls or do you want puts? Okay, which by the way, I haven't said that, but that's kind of classical. Let me say it just in case. So calls are normally on the left, in TradeStation definitely on the left, puts are on the right. Okay, so the information that you see on the right is concerning puts, the one on the left is concerning calls. So maybe when looking at your options, calls or puts, you are also trying to determine which expiration dates to use. And again, with this filter, you can really make your life easier because maybe you have certain preferences when it comes to which expiration dates to use. I was saying a minute ago that when trading options, you always need to decide on 3 particular parameters. Number 1 is, will I use calls or will I use puts? This is the first parameter to be decided on. The second parameter to be decided on is which expiration date. Okay, and again, there are many. So TradeStation offers a tool that allows you to filter out those expiration dates, and I'm going to show you now. The third parameter is which strike. Okay, and which strike, well, I already showed you how to do that. Which, by the way, when you click on the filter here, you can be a little more precise. You know, maybe you want, 14 strikes out of the money and 2 strikes in the money, or maybe you want more strikes in the money and less strikes out of the money. So again, you can also play with those particular metrics to end up with whatever you want. Normally, I would say, it's good enough to not to change it here and simply, update whatever you want from the prior drop-down menu I showed you with strikes, okay? Anyway, so let's focus on expiration. So first of all, you have an option here that talks about how many expiration dates do you want to load. By default, it comes with all. The reality is that this is directly related to the type of trader you are. If you are a trader who trades any option strategy and you combine strategies and you do all sorts of things because you are very advanced and you really do diverse stuff, then you keep it as all. But normally, I would say for most traders, all is way too much because let's face it, why would you load options that expire 727 days from now? That's like 2 years later. If let's say you are doing credit spreads and you are attempting to use 1 or 2 weeks out, it doesn't make sense. Okay, so typically when it comes to number of expiration, just like number of strikes, typically you would pick a number. Okay, now for example, let's say you want to look at 4 expirations. Okay, so when you click for expirations, now you have 6, 13, 20, and 27 days, which basically gives you information about, let's call it 1 month out. So probably this is good enough, especially if you are a credit trader and you want to sell iron condors credit spreads. So you would be using 1 week, 2 weeks, maybe 3 weeks, maybe 4 weeks. Okay, so that would be a kind of like a very convenient way to do it. Okay, now having said that, there are some symbols, and let me show you SPY, because before I show you SPY, take a look at those dates in the calendar: June 28, July 5, July 12, July 19. All those dates happen to be Friday. Okay, all those dates happen to be Friday. So let me show you what happens if I load SPY. So SPY is such a liquid ETF that the demand for expiration dates went beyond Friday expirations, and therefore we also have expiration dates that happens to be during weekdays. So June 24 happens to be Monday, June 26 happens to be Wednesday, and June 28 happens to be Friday. So in other words, if you load 4 expiration dates on stocks or ETFs such as SPY, which we don't have many like that because really SPY is amazingly liquid, okay, and the demand for SPY options is to the roof. But for stocks like that, if you load 4 expiration dates, that will bring you out to 9 days out. So if you want to have 1 month of data with SPY, you may need to load, I don't know, let's see what happens if I load 9. So if I load 9 expiration dates, it's bringing me up to 20 days out, right? Where if I was to load 9 expiration days with Facebook, it's bringing me out up to, half a year, 180 days, okay? So again, quite different, even though this normally happens to Spider only. And maybe there are a few more markets that don't come to my mind now. I mean, I know there are a few more, but very few. Okay. So anyway, something for you to keep in mind again, because normally the use of those filters have to do with customizing OptionStation Pro so it kind of matches your trading style the best as possible. Okay, guys, you have been very, very silent, and I know probably this is a very simple content today, but please go ahead and let me know on the chat box if everything is going well on your side. Okay. Okay, so it's all good. Perfect. Okay, thank you guys. So again, I understand that to some of you this is probably quite basic, okay, but it's again always very healthy, okay, to go back to the basic at times, okay. So anyway, more options when it comes to filters, okay. So expiration types, okay, and again here what I like to do is to kind of combine giving you information about OptionStation Pro in this case, but also how does it apply to how we trade. And in this case, notice how we can check mark or uncheck the type of expiration days that we want to use, the monthlies, the weeklies, or the quarterlies. So quick recap here, just in case you don't know. Monthly expiration dates are exactly like the weeklies. So why is it that the weeklies are known as weeklies and the monthlies are known as monthlies? Well, a monthly option is like a weekly option that happens to expire on the 3rd Friday of the month. So if an option expires on the 3rd Friday of the month, then that option is known as a monthly expiration option, even though it's an option like the weekly option would be. If a weekly option happened to expire on the 3rd Friday of the month, then it would be called monthly. Okay, so really there is no difference. Well, I mean, there is a technical difference with the settlement process and so on, which is inherited from the old times. But from a trading point of view, it doesn't matter, because the last moment you could trade monthly options and weekly options is 4 p.m. Eastern time, Friday, right? Then the market closes, you go into the weekend, and then next thing you know is Monday, and that option has expired because that's it, So now, so why is it that in this filter tool, we have the possibility to separate monthlies and weeklies? Well, because normally the liquidity is not the same. This is probably inherited from the past, but always the monthly expiration date always has more liquidity compared to the weekly expiration dates. And the reason why is because in the past, options always and only expired on the third Friday of the month. We didn't have options that expired in the second week of the month or the first week of the month. It didn't exist. So when weekly options were created a few years ago, they became very popular and everything, but still the majority of the trading volume, it's coming in to the monthlies. Okay, you can see that very clearly. So here, for example, take a look at the open interest for the monthly expiration, which is 19 July 2019, 20,000, 50,000, compared to the weeklies, 500, 5,000, 1,000, 5,000, 3,000, 5,000. So you can totally see how the monthly expiration has much more liquidity. So because of that, okay, or because of your strategy, maybe you are not doing short-term trading with options, you are doing something a little longer. So maybe you don't need to see the weeklies. Maybe you want to hide it. So if you were to do that, if you were to uncheck the weeklies, then TradeStation is only going to show you the options, which are weekly. 27 days, 55 days, 90 days. Again, this is out of convenience for the option chain to show you only what you need out of convenience. And then we have the quarterlies, okay? And with the quarterlies, the same story happened. Quarterlies are normally way less liquid compared to the monthlies, okay? So you can see the quarterly here, that has 3,000, 5,000 contracts, where again, the monthly 20,000, 15,000. So again, but some stocks may have a little more liquidity in the quarterly, so that depends on the trader, okay? And by the way, what's a quarterly? A quarterly is an option that expires the last trading day of the quarter, okay? The last trading day of the quarter could be Tuesday, so then the expiration will be on Tuesday. It doesn't need to be Friday, okay? So again, something for you to keep in mind, okay? And then deliverables, okay? So sometimes we have options that are created in the marketplace that are non-standard. They don't represent 100 shares. They represent a different amount of shares, or maybe there have been a stock split and the option had a specific strike, but then the strikes changed, or the strike changed and also the quantity. Something, let's call it weird, just to keep it simple. So normally you don't want to show those options because they will very likely not be liquid. Even though if you're curious to see, you could certainly activate. And then the mini options, okay, those again, they are not available for many stocks, but for example, for the SPY, again, super liquid, isn't it? So with the SPY, you do have mini options, and basically mini options is options that are 10 times smaller than the regular size. In other words, they represent 10 shares instead of 100 shares. So if I load mini options for the S&P, maybe I'm going to have to load longer expiration dates. That's interesting. Nothing shows. Okay, so nothing is showing. I'm not sure why. I would expect those options to show up. When looking at, maybe they stopped, to be honest. It's a long time I haven't looked at the mini options because really it was a complete waste of time. You will look at liquidity and it was really bad. So maybe they have disappeared, okay? Or maybe for whatever reason it's not showing up, okay? But anyway, so that's how you would activate or deactivate, okay? And then this spread width, okay, that would not do anything if you are using single spreads, because single spreads means that you are asking the option chain to show you single strikes, so one strike at a time, where the third tool that I need to show you is the spread tool, where you could actually ask TradeStation to show you the option chain already set in the form of vertical spreads or calendars or ratio spreads or straddles or strangles. So for example, it's very common, and to be honest, I don't do it much when we conduct sessions, maybe I should, but it's very common that there are times where we are doing, let me go ahead and contract this a little bit. So I'm going to use 5 expressions, for example. So it's very common that we are doing a session, a get-together session, and we identify an opportunity to do a neutral long trade. And to do a neutral long trade, we end up building a bull put spread, isn't it? And therefore, we end up using the UFOs. We end up finding where is a good green UFO. Let's say the good green UFO is located at 190. So then we look at the 190 strike. Let me go back to simple, right? We look at the 190 strike, and then we look at the strike next to it, okay? And we envision ourselves being paid 222, and we envision ourselves paying 136, and therefore the difference is going to be the net credit for the spread, right? So, you know, we can certainly do it like that, and often, probably because it's, in this case, for educational purposes, right? So for me to be able to do an explanation, it may be better to use 2 different rows so I can point at both prices for the 190 and the 187.5. But the reality is that with TradeStation, once you are experienced, it's also very convenient to use combinations such as vertical, for example, where now you can see the aggregate result of what would happen if you do 190, 187.5, which is a midpoint credit of 86. So it's putting it together, right? And now what may happen here is that you tell me, okay, well, wait a minute. I don't want the 190 and the 187.5. I want the 190 and 185. So maybe you want to use 2 strikes separation instead of 1 strike. So this is where that setting inside filter comes into place, where you can add 2. So now it's going to use 2 strikes instead of 1 to create those combinations, okay? And as you can see, well, of course, because I'm only loading 4 strikes, it's not showing up. So let me load a little more. I'll do 6. So now you have your 190, 185, right? And now you can see the aggregate result for that one, which is 142 instead of 86. So again, this is quite convenient, because also from here now, if I want to do this trade, I can just click, and automatically in the bottom part, it's creating a trade ready to be executed with both legs, the one that you buy and the one that you sell. Okay, so again, just convenient stuff. Okay, just convenient stuff, and that's why I'm talking about it. Okay, most of the times I'll continue doing it like that for our get-together sessions. I normally use those 2 different rows. Okay, because again, I believe probably it's more visual. Okay, but when you are doing it for yourself, probably it's going to be more convenient to do it the other way around. Okay. Let me take a look at the chat box here. Bojan says, I'll be learning this intently as I am opening my own self-directed 401k, which I plan to apply these strategies for my wealth account. Very good. Yeah. All good. Discovering new things I didn't know. Really good stuff. Perfect. Thank you so much, Supply and Demand Trader. Good to see you, my friend. Good. So let's continue. Okay. So I'm just going to reset the whole thing. Apply, okay, and basically with some of the things that I wanted to discuss here in the option chain, I kind of, from a structure point of view, I think I did point it at the most important things. Okay, now there are a few more things that are also important, so I want to add a little more here. First of all, on the top, and again, this is kind of obvious. Okay, maybe I don't need to say it, but on the top you get to see the information, level 1 information related to the underlying stock, in this case Facebook, okay, and you get to see the last price, the net change, the bid, the ask, the high, the low, volume, historic volatility, and also if you have a position with the stock or you don't. Okay, so this is great, but also all of this you can right click and it's customizable. So you can right click on format columns, and let's say you tell me, oh, you know what, but really what I would really like to see is, you know, what's the beta, you know, or it's not like you have a lot of information you could add, but maybe you are interested on the beta, or maybe you would like to see what's the real-time value for the VIX, Okay, so you can add it. Okay, and when you click OK, now you have the VIX value that will show up here on the top. So you have certain level of freedom to customize the upper row. Okay, same thing happens on the bottom part. Okay, your option chain will come by default with certain columns. Okay, you can always right click on the headers, sorry, not on the bottom part. Right click, and the moment you actually in the bottom part, it doesn't work with the right click, sorry for that. It would work with the configure, okay, where you can now, you have a button here which is called configure. Okay, so now here you have certain options such as format columns. So if I click format columns, this will allow me to customize all the columns available. The ones I have selected is to show me the mid. Okay, so the mid is the midpoint between the bid and the ask, and that's the mid. So I have that. The implied volatility, okay, which is right here. Okay, even though also notice how TradeStation gives you for each expiration date, it gives you the average implied volatility for that particular expiration date. This is sometimes very useful, and you have seen me at times in the get-together sessions look at that number. And if I am undecided between two expiration dates, for example, let's say I am undecided between July 19 and July 26 and August 2nd. Let's say the three of them work, and what I want to do is I want to sell options. Okay, well, let me tell you that probably I'm going to pick this one. Why? Because the average implied volatility is higher, meaning that probably there is a little bit of extra pricing on the options on that expiration date. And since in this case I'm talking about selling options, well, I want to sell options with the greatest value as possible, so I get paid the greatest amount of credit as possible. And therefore, simply by looking at this part, you would be able to see the aggregate implied volatility for all the strikes from that expiration date. Now, if you wanted to be more precise, you can also look at the implied volatility in the inner column, and that one represents the implied volatility for each of the strikes. Okay, each of the strikes will have obviously a different value for implied volatility. They will be similar, okay, but they will be different depending on the amount of options being bought and sold at each strike. Okay, because this will change the price and therefore the expectation, which is the volatility. Okay. What else do I have? I also have information about the open interest. Okay, that's what I have, and also the delta. And why is that? Because all those four pieces of information help me to understand better how much I have to pay or will get paid when I do my trade, thanks to the mid. Implied volatility will help me understand better how cheaply priced or expensively priced options are. So that helps me understand that. Open interest helps me understand more about is the option liquid or not. And finally, the delta helps me understand if I have enough exposure to direction when I do directional trades. Remember, we always look for deltas of 30 and so on. Okay, so that's what I have. Okay, but I could certainly add any of those other values I have on the left. Okay, now if you start adding columns, okay, so let's go ahead and add a bunch. So if I add a bunch of columns, okay, and I click OK, the problem is that everything becomes, a little compressed. So something that you can do with TradeStation, if you put your mouse on top, okay, let me do it here. Was it here? Interesting here. Okay, so again, I'm getting a little confused here with TradeStation 10, which has a few more functions. But let me tell you, so you will be able to come in here and either click on the settings wheel or below and right click, and you would have an option which is kind of like, I don't know how it's called, but I believe it's like auto adjust. So basically all those columns will auto adjust in a way where you would be able to see all the values and potentially all the headers too. Sometimes it's possible, sometimes it's not. It depends obviously on the real estate on your screen, the resolution, and how many columns you have inserted. Okay, so I'm just gonna remove them to where I was. Okay, so that way I'll be happy with the way it looks. Okay, but all of this is customizable. Okay. One more thing about the option chain is that the option chain is normally the place where you start doing anything you do with options. So in other words, if it's very clear in your mind that you're going to buy a certain call or buy a certain put, what do? You just come in here and let's say you say, hey, I'm going to buy the 190 call. So what do? You put your mouse on the ask column, just like you would do if you were to execute a trade with the matrix, right? So if you were to use the matrix, for you guys, if you have used the matrix, if you were to execute a trade as a market order, you will click on the ask column. So let's say you want to buy that call. So then you put your mouse in here and you just click. And the moment you click, in the bottom part, you get your trade order bar, which is the options trade order bar, which in this case only has one option, which is buy to open one of the Facebook calls, which is the one we just selected. Okay, and if you were to click place order, magic, you are in the market. Okay, of course, you also need to decide if you want the order to be limit and therefore which price, or if you want the order to be market, which would be changed by using the drop-down menu and selecting market, right? You also have activation rules, right? And the activation rules are used typically to add price points from the chart. For example, buy the 190 call on Facebook if Facebook falls to I don't know, I'm just going to make this up, 189.50, right? So if Facebook drops and reaches a price lower or equal than 189.5, go ahead and buy the call below. So how do you do this? You either do it manually, and you have to watch Facebook manually and do it manually, or you use an activation rule, and then TradeStation will be watching Facebook for you. And whenever Facebook reaches 189.5, then the below order will now become active. Okay. If not, the order is not active. It's just there, but it's not active. Okay. Okay. So let me hide this order. What else? I was saying that everything starts from the option chain. So what else do you do with the option chain? The other thing that you do from the option chain is to begin with your options analytics exercises. To do an options analytics exercise, you would not click. If you click, you are buying. If you select the ask, you are selling. If you select the bid column, what you would do is you would right click. And when you right click, notice how you have access to analyze buy or analyze sell. So let's say you want to buy an option, such as a call or a vertical. So you will just pick the right option. And the moment you click, notice how we are pointing at the options tab. So the moment we click on vertical or any other strategy you will choose, you will see how the analysis tab will be activated, and you'll see how TradeStation automatically switches to the analysis tab, which is where we do our analytic exercises. Okay, so click on vertical, 1, 2, 3. Here we go. We switched. Actually, I selected the wrong one. Sorry for that. I right-clicked on buy. I should have selected analyze buy. Here we go. Now I did it correctly. So right-click, analyze buy, and then when you click vertical, 1, 2, 3. Now it will work. It's opening the analysis tab with the vertical strategy in place. Okay. Another way to do this, okay, is, let me erase it. So again, the cross, this is how you erase. So click. I just deleted that analytics exercise. Go back to the option chain. Another way, if you wanted to do a vertical, remember on the upper part, you could have selected vertical. And let's say you wanted to buy this vertical. So again, two options. If you click, you buy. But now you buy the vertical. Okay, why? Because you have selected vertical above, so you have vertical below. So that's one thing to keep in mind. If instead of clicking, I do the same right click, okay, now automatically it's telling me analyze the vertical. So it's not giving me a drop-down menu for me to choose. Why? Because I have already chosen. Okay, so it's giving me the option to analyze a vertical directly. Okay, in the get together sessions, most of the times you've seen me do this manually because I believe it's more visual. But again, You can do it any other time you choose, okay? So now I'm back to doing my analysis, right? So I'm back to the analysis tab, okay? And here, there are multiple things for you to be aware of, okay? So first of all, in the upper chart, you have two lines, which is the gray line and the blue line, okay? So the blue line has to do with the expiration date. Notice how it coincides, okay? 12 July 19, well, that's going to be a Friday, and 7/13, which is 13th of July, that's going to be the day after, okay? And which is when basically you are out of the trade, the option has expired, and therefore the risk profile that represents that date would be the one that is in blue color, okay? So that line represents on expiration date. The one that is gray, okay, right here, the one that is gray represents the current date, okay, which is today. And in my case, as you can see, it shows us June 23 and July 13. And the reason why is because I am in Asia, as you know. Being in Asia, when options expire in July 12 in the US, well, that's 4 a.m. in Singapore. So 4 a.m. is July 13, okay? And same story. For most of you guys, I would guess if you are in the States, your current date is June 22nd, but for me, it's already 12:10 a.m. Therefore, technically, it's already 6:23. Okay, so that's why you see those dates. Okay, but in any case, the gray one is the current date, which is the one on the top, where the blue one is on expiration. Okay, so this is quite standard. Okay, but it's important for you to keep in mind also because there will be times where in the bottom part, when you add your option and now you have the option for you to do certain simulations and find out about your delta, find out about your theta or your gamma, your vega, your rho. So you find all those values, okay? Those values many times will be calculated based on some plot. And you need to be careful because sometimes that plot 1, which is current date, will come by default as plot 2. So notice how those values, sorry for that, notice how those values are certainly different, okay? Everything is different. The PNL is different, everything is different, but sometimes we don't realize that we click on plot 2, or by default is plot 2, or maybe you traded that stock before and you did look at what happened on expiration, which is plot 2, and then you forgot to bring it back to plot 1, and next time you replan a trade on that stock, you have plot 2 instead of plot 1. So this is a critical place on the screen for you to always double check to make sure you have selected the right choice from the drop-down menu. Okay, so you have proper simulations. Okay, so again, when it comes to simulations, what you get is the theoretical PNL. Okay, this obviously depends on not only how much the stock is moving in your favor or against you. This also depends on the slippage that you get. So for example, you can see that the bid price for the spread is 120. The ask price for the spread is 145. So if you were to do this trade with the midpoint, is 133. So in here we have selected. You could click on the check mark. This will allow you to edit the price. Okay, and I have selected. It comes by default as 133. So therefore, basically, okay. So that's very interesting. Why is it that is giving me 52? That's quite interesting. I believe this should be some sort of a bug with TradeStation, because notice that it's showing us 002, which is basically 0. Because of course, if you enter at the midpoint and you exit at the midpoint, you don't make money, you don't lose money. So it's basically 002. I guess it's a rounding of other decimals. But interestingly enough, if I change by 1 cent, it's changing. Oh yeah, yes, this is correct. sorry guys, I just got confused for a minute. So yeah, this is correct. Okay, even though it's all about the rounding of the decimal places. Okay, that's what the problem. It's for whatever reason I was thinking this was $100.52. It's $0.52, or it is $1.52. I guess that the fact that it's more than 12 a.m. got me thinking about this in a different way. Anyway, so let's say you bought this thing at ask price, which is 145. So if you are buying this option, or that spread, I should say, at the ask price 145, well, obviously you start at a loss. How much is your loss? 12.52. Okay, why? Slippage. That's slippage. So the theoretical P&L will give you information about the real-time price P&L, including the slippage. Okay, so that value will be impacted by the fact that the stock may have moved your way, or the stock may have moved against you. And this theoretical P&L applies to simulations of trades that you are just entering or planning to enter, that you haven't entered yet, but also trades. Let me load AXP. You may remember that in the manage tab, we have a trade with American Express, correct? So we have a trade running there with American Express. If I expand it, you can see there. Okay, so we are long a call with American Express, right? Here's your call. So, if I load AXP on the upper part, TradeStation is intelligent, and notice how here it's showing me positions and simulations. It's showing me both. So again, I don't have AXP as checkmark, okay? But if I was to checkmark AXP, the simulation I got on my screen now, and that theoretical P&L, it's actually not theoretical. That theoretical P&L is the real P&L as we speak right now, and it does not apply to a simulation. It applies to a real trade that I have in my account. Well, to be honest, it's still theoretical, because remember, the P&L also incorporates the slippage, but you never know exactly the slippage you'll get until you execute the trade. So you may end up making a little more than that. You may end up making a little less than that. So technically speaking, TradeStation is right. It's still theoretical. But what I meant is that below, it's not a theoretical position. It's a real trade that you have in your account, okay? So let's go back to Facebook. Okay, so we keep working on that. We keep working on that simulation. Okay, so loading Facebook back. I'm not sure. Okay, now. So what else? Okay, so I want to go back to the standard one. So what else do we have? Okay, then we have the value, and the value is the same thing. I mean, to be honest, the theoretical P&L is calculated from the value. So it's whatever price you got there, and whatever value the option will have when the stock reaches this point, which is the value on the left. Okay, so if you pay this for the spread, or if it was a credit spread, if you got paid this amount for the spread, depending if you are a buyer of options or a seller of options, if this is your price, right, and given the price of the stock, the options model is telling you the value of the stock would be this. So then if you do the math, your theoretical P&L is going to be that, okay, putting on the side that there is some decimal rounding and stuff going on, okay? But that's what it is, okay? So those two values are somehow the same, okay? And then you have the Greeks, delta, theta, gamma, vega, rho, which again, all those values are related to the Greeks that are coming from the models, okay? So by the way, talking about the models, when you click on settings here, okay, let me pin it, okay? So that way we don't need to move it around. So when you look at when you get the options, okay, you have here the option to choose when it comes to pricing models, the Black-Scholes, and then this one, the Berg-Sun and Stensland, which is always very difficult for me to pronounce. Probably I didn't do it right either. So you have those two options. And my recommendation is that even though by default TradeStation, I believe it comes with Black-Scholes model, I recommend you very much to switch it to the I will call it the B and S. I think it would be probably a much better choice, okay? Because again, it takes into consideration a few more things that make the simulation to be a little more realistic, okay? In any case, if you use the Black-Scholes model, it's not a big deal, because in the end, option simulations are always an approximation of reality. In the end, you never know exactly what you got until you do the trade, because it's a simulation, okay? But really, simulations got so much better with the time, and the Black-Scholes model is a little bit outdated because it was created in 1985. So, I recommend you to use the other model. So what else do we have here? Important to have selected implied when it comes to implied volatility, because TradeStation can also do some sort of a skew approximation and so on, but implied will be better, because then you are feeding TradeStation from that information, from that column, right? The implied volatility values. And that is real-time stuff. Okay, so instead of doing some sort of an estimation, you are just running something that is what it is at the moment. And I would recommend you to do that. Okay, interest rates. Okay, they impact the price of the options. You can fix it. Obviously, automatic would be a better choice. So let TradeStation find out what's best. I didn't talk about historic volatility bars back. 90 would be adequate. If you were to apply it in a way very classical, you will go for 252. That would be a full year of trading. Nothing wrong with doing that. But really, this is something that we haven't used yet. But we need to learn on how to do analytics for credit strategies. Okay, the beauty with TradeStation is that you will be able to, utilizing those dates here below, you will be able to impact this plot, and therefore get a measurement that tells you how far a stock is likely to move between a certain period of dates based on the speed at which that stock has been moving in the past. Well, the speed at which one stock has been moving in the past is the historic volatility. And in order to have a prediction of how far a stock may move, and to have that prediction to be somehow current, instead of to be like a too conservative or too aggressive type of prediction, well, you would not want that figure to be too great, right? So if I was to use 252, well, it's not going to be wrong, because normally, especially if you trade very liquid stocks, they would tend to be stable through time. So, the way the stock behaved in the last 90 days is probably similar to the way the stock behaves throughout the whole year. Okay, guys, just give me 1 second, please. Sorry, guys. So as I was saying, is that if the stock that you trade is quite liquid, normally it would not change that much its personality, and therefore the way the stock will behave in the last 3 months is going to be about the same that in the last year, which is 90 days or 252. So I would say 90 is good enough. And it's going to be about the same as 252, but somehow if something has been happening to that stock in recent times, so a smaller value will probably reflect it better than 252. So in other words, it doesn't really matter what you type there, but by default it comes with 90, and I would say it's okay to leave it as 90. Okay. What else? Using midpoint as price, okay, will create option simulations where you are assuming that you will always get the midpoint. This it's certainly too optimistic in many cases, but at the same time, we also need to understand that this is a simulation, meaning that we always need to allow for some pessimistic thinking when it comes to, even though this trade will provide you with whatever, in the real world, when you get executed, probably you will get less or you will pay more. And so, using midpoint as price does not mean that you are now guaranteed to get that number. Also, if you were not to use midpoint as price, which is absolutely okay if you want to uncheck it. The risk, and that's why I'm going to suggest that you check it, the risk is that somehow you may be thinking that because the simulation is not using the midpoint, I already have in front of me the worst case scenario, and maybe you add too many contracts to your trades because you think it's already the worst case scenario, but maybe it's not the worst case scenario. Maybe the day you get filled, actually you get a lot of slippage, or if you use a stop, you get a lot of slippage. So, you know, you always want to have this mindset where you are ready to be a little extra pessimistic, and therefore, you know, checking or unchecking will not make that big as a difference. Therefore, I would suggest you just leave it checked, okay? Then we have the data ranges, okay, which by default come as now to earliest expiration. This is normally the way to go for most of the time, but when we learn later in future sharpening sessions how to deal with credit strategies, where we sell options and we wait for price to expire, for the options to expire, and we want to measure how far the stock is likely to go within a period of dates, well, then you will have to change the dates manually, and the way to do it is to move it to custom, where now you can actually edit those dates, okay, and input anything you want. So today I will not do it. I'm just showing you that this feature is here. So when we use it, you understand where it's coming from, okay? Then you also have some options for you to customize the 2D graph, which, you know, I will not address because, to be honest, I mean, you could certainly play and change the color of the lines and stuff like that, so why not? But at the same time, you know, I think that this exceeds the purpose of this session because it will not have an impact in trading performance, okay? So this is just visual impact, so you feel free to play with it, okay? So expected move calculation, so you can have an optimistic or pessimistic, okay? So again, if you do pessimistic, as the name suggests, probably would be a more conservative approach, okay? It would be a more conservative approach to your simulations, but at the same time, it would also create a lot of scenarios that are too close to what you would want it to be in the perfect world. And if you have been trading options for a while, you know, in the perfect world, options don't work well, because it's like, okay, I want to sell an option that is far enough from current price, so it's no way that that market will fall to where my option is, and therefore my option will not get assigned. So if you were to find an option that is so far away that it's no way price gets there before now and the expiration date, that is what I mean to be very, very, you know, that is what it means to be very pessimistic with the simulation. And when that happens, you end up getting no premium at all. So yeah, you may find an option, but you get paid 3 cents for that option, which means that you will make 3 cents most of the times, but the day the market actually broke probabilities and went all the way to where your strike was, that day you lost crazy amounts of capital, because the move that you had to collect against you is way too large, okay? And therefore, an optimistic simulation, I think, will kind of, even though the name is kind of backwards for what I just said, but in this case is counterintuitive, where an optimistic simulation will have you more prepared for a loss than a pessimistic calculation simulation that will have you more trading in a too overconfident type of mode, okay? So we will leave it as optimistic, okay? Then price updating has to do with, as the name suggests, how fast price updates, okay? Which obviously, unless you have a very slow connection, I would say fast is good enough. Also, it has to do, putting on the side of connection, sometimes you kind of want to observe the option chain and give you time. So, you know, there may be times where you're like, okay, let's update slow. So now it gives me time to see the different values, how they change in places. And if I want to do math to calculate difference between strikes, it gives me time to do it, okay? Normally, I would say you want real time, so that would be fast, okay? Also, for the Greeks, typically 2 decimals is good enough, okay? If you want to be very perfectionist, you can go for 4, but really, it's not gonna add. And then same from probabilities, okay? If you want to be very perfectionist, you can add more decimal places, but really, it's not gonna do anything that creates any significant difference, okay? So I would suggest to leave it like that, okay? And again, all those different settings, okay, will be very useful, especially when we start doing certain types of simulations, especially for the credit strategies. And this obviously implies, remember when I told you at the beginning of today, the egg and the chicken? So, well, now you know these exist, but really to complete this conversation, so we will need to spend some more time looking at specific option strategies, how we're going to deal with it, and then when we apply it, then you will recognize what is it that I'm doing, okay? So anyway, so let me take a look at your questions, and basically we are reaching the end of the session as we speak. Okay, I didn't give you a break, which I normally do after 1 hour. We've been going straight for an hour and a half since we're gonna conclude the session in just a few minutes. So we'll just not take a break today and just finish it. But let me double check the question. Oh yes, the MRU symbols. Yeah, I can see Al, you are answering the questions, so thanks for that. And also Mark, hey Mark, how are you? Good to see you. Have you talked about your choice of using 1.6 standard deviations on the analysis? No, I haven't. Okay, some of you can see here a 1.6. Okay, this has to do with standard deviations. By default with TradeStation it comes with 1. Okay, and Mark knows this because you've seen me before deal with non-directional strategies and advanced simulations, so that's why he's pointing at that. But really this has to do with the egg and the chicken thing, which means that you know, when we do sessions on how to simulate more efficiently non-directional strategies, so then I will talk about that. Okay, so that would be my way to be pessimistic. Okay, but instead of using it from here, optimistic, pessimistic, I will be pessimistic in a way that is specific with a measurement that will be 1.6. Okay, and I will explain at some point why 1.6 and why do I do this. Okay, but anyway, so today basically we've been going through OptionStation Pro. There is one last tab, I just flash it, okay, even though I will not use it today, which is the search tab, where you could specify, for example, Facebook, I want to do vertical spreads, I want 2 strikes of interval for my spread. I expect Facebook to drop up to 3%. I want to be in the trade for 5 days. Please TradeStation search, and TradeStation would be able also to show you proposed trade strategies. For example, use June 20, use the 180, 190 to do a bull put, which is a short put vertical. So TradeStation will be able to propose automatically, and then you will be able to sort based on, for example, probability of profit, right? You can sort which are the trades that are more likely to profit, which are the trades that are less likely to profit. In this case, to be honest, doesn't look too good, and you will be able to do all of this. Okay, but I will not talk about this because again, this has a lot to do with back to the egg and the chicken. I'll need to teach you more about options, and then we will be using those tools, because the beauty of this tool is that if you click run, okay, and then you sort by probability or delta or whatever, and then you pick the number, and it's like okay, I want this one. So now on the left you have the option you want, and the only thing you have to do now, take a look. If you scroll to the right, okay, best fit. So if I scroll to the right, now I have my analyze button. So if I click on that, magic, it brings it into my analyze tab, where now I have two trades to analyze. But basically, TradeStation is already suggesting me which trade to do. So this is now for me to have a final check of those parameters, and for me to click on the 3 little buttons there and just go for trade. So you can load the trade below, customize the limit price, whatever you want to do, and then click place order, and the trade would be executed with or without an activation rule, depending on your choice as well. Okay, so you know, let me hide this one. So we have the search tab as well, but again, just like some of the things I said in the analysis tab, I will not be discussing it because it's too much of the egg and the chicken thing, meaning that I need to spend some time explaining other things so that it will be understood. Okay. But anyway, guys, if you have any question, this is the time to type it. Your last question maybe, if you have any final question, and if you don't, so then I will conclude the session now. I want to thank you for joining us today. Super pleasure, of course, to be your guide. You know, I always have a blast conducting the get-together sessions. Is really a lot of fun for me, and I love it. And I love to see how you guys are taking the information, applying it, and how you are evolving as a trader and growing. And you know, love it. Okay, so again, we'll conclude the session today. And the last thing I would like to say one more time is please send your emails if you have questions, if you need us. If everything is going good and you want to say and you want to share, we'll be delighted. If you are struggling, if there is something we can help you with, speak up. Okay, don't make yourself isolated, if you wish, and you may have a problem and you don't communicate. So then we don't know you have a problem. So let us know if that's the case, and we can organize some special sessions or depending on your problem to just improvise a session if needed and do whatever, and hopefully help you much better. Okay, so please speak up, and we will see you next week on Tuesday. Okay, guys, take care. Let me see. Thank you very much, Mark. Thank you very much, Bill. Thank you, Marcus. Thank you very much, Bojan. Thank you, everyone, guys. You guys take care. Bye-bye. See you soon.